Okay, hope you're ready. Let's jump into it. So lo and behold, we do have one of the occasions where, if you recall in the morning, I said dollar will be dropping, and then one of the currencies will be red as well. Okay, that is the case here, where we have British pound red, whilst dollar is red. So across board, British pound is like the dumbest. Sorry for my language, yeah. Is the dumbest. Like, what, in terms of like human perception, when you have, okay, this is a group of people, and I'm laughing because I like the analogy that I myself am going to use. Okay, it's like we have a group of people, right? And then let's say all these are groups of people, but this is our leader. Okay, so when our leader goes up, it means that we should all go down. Okay, that's the rule. Okay, so our leader is going down, so the rule is everyone should drop. Okay, so let's say we are in the army, right? And then this is our commander, and then our commander, we are doing press up. So when our commander goes up, we should be pressing down, and then when our commander presses down, we should be pressing up. Okay, that's the rule. And then we have all the soldiers there, and that's our commander. So right now our commander is down. Okay, our commander is down, pressing down. We should be pressing up. And then you have one dummy. We have one dummy who doesn't understand the rule that, okay, our commander is down, so we should be up. Okay, and in this case, our dummy is British pound. Why are you going up? Why are you going down when the commander is down? It doesn't make sense. Okay, therefore that is the odd one out. So we select that, and then we all beat him up. I don't know where this is coming from, but it's just a funny analogy. Alright, so we all gather and then we beat him up. Okay, so Euro is gonna beat him up, Yen is gonna beat him up, Oz is gonna beat him up, CAD is gonna beat him up, Swiss is gonna beat him up, and New Zealand is gonna beat him up. So if we go on this chart, and then we find the pairs. Okay, let's start with Euro pound. Let's see if Euro is beating up the pound, right? We already know that because it's clear. Euro is being pound is being beaten up, and then we go on to pound yen. Is being beaten up. Pound Aussie extremely being beaten up. Pound New Zealand being beaten up. Let's go on to pound Swiss. That is also beaten up. Okay, and then let's go on to pound CAD, GBP CAD. Okay, that's also being beaten up. Right, so you get the understanding. Okay, so once you're able to determine, and this will come with experience, once you're able to determine, okay, our commander, what is our commander doing? It starts from there. What is our commander doing? Is our commander going up? Sorry, is our commander pressing up or pressing down? If our commander is pressing down, then we all need to be pressing up. Okay, so in this case, dollar being the commander is pressing down, so we all need to be pressing up. Okay, and then we find the dummy, and then we beat the dummy. It's as simple as that. There will be times that it will be clear like this, and there will be times that it will be not. So your job is to determine which one is behaving as if it's doing the opposite of what the commander is doing, but it's actually not. So let's say our commander is down, right? It's like I'm acting a movie in my mind eye. where this guy is acting as if he's up, but he's actually not up. So what I mean by, in the movies you have one guy always trying to be smart. We clearly have the dummy one, which is Pound. Okay, Pound is the dummiest among all of them. But then we have this guy that looks like he's smart. Okay, he's trying to be smart and cute, that he's actually going up whilst our commander is down, but he's literally just cheating. Okay, that's the smartest one. So in this case we have yen. Okay, you can see yen looks like it's up, right? But it's cheating. Yeah, it's 0.6. So yen is the second dumbest. He's cheating. He's not up, but he's acting as if he's up. So all the other pairs will beat him up again. So our weakest pair, or our dummiest on this chart, will be British pound and yen. So these two are the dummiest. The most dummiest person will be pound, and then followed by what? The yen. And then if you look closely, it'll be followed by CAD. Okay, but pound and yen is the ones that you need to be beating. Okay, so again, if we go onto the chart and then we look at euro yen, Aussie yen, CAD yen, Swiss yen, New Zealand yen, they all should be beating the yen up. So let's go and check. So Aussie yen being beaten up, New Zealand yen beating the yen up, euro yen clearly beating the yen up, CAD yen doing the same thing, dollar yen, we don't talk about them because they are two dummies. The dollar is a commander, so you can beat the commander. But let's look at Swiss yen. CHFJPY. Right, you can see Swiss yen also beating, the Swiss also beating the yen up. And then what else? I think that's it. Let's go back and see. Yeah, Swiss yen. Yeah. So you understand. That's how you view them. So this was a good example. Anytime you're confused, come back to this analogy and it will make sense to you. Okay, so anytime our commander is up, like let's go back to when our commander was up, because now the commander is down. Okay, let's leave this. Let's leave this and then go back to DX. Okay, and then look when our commander was up. So our commander was up from the 2nd of February. 2nd of September. Let's look from the 2nd of September to the 3rd. Let's look at the 2nd to the 3rd. That's 3 days. Sorry, the 1st to the 3rd. That's 3 days when the commander was up. Okay, the 2nd to the 3rd. My bad. 1st to the 3rd that our commander was up, and then see what the opposite were doing. So if you draw back down to New Zealand, okay, from the 2nd to the 3rd, or 1st to the 3rd, this thing was sideways. So when the commander was up, this thing was not dropping. Yeah, this was not dropping. Let's go to Swiss from the 1st. So our commander was up, this thing was dropping like crazy. Okay, let's go to CAD. On the 1st, our commander was up, this thing was dropping. Okay, let's go to the next one. Our commander was up, this thing was dropping. Let's go to yen. Our commander was up, this thing was also dropping. and then here our commander was up, this thing was also dropping, and then the last one our commander was up and this thing was dropping. Okay, so when the commander was up, the only pair that was not dropping with it, okay, was New Zealand. All right, so in here is the opposite. What do I mean the opposite? Okay, so when the commander is up, we want to see everyone drop. So when everyone is dropping and one decides to stand or not drop with it, in this case, this one is being the, we call it, or I'll put it in this way, in a nice way, he's a dummy, but he's smart. Yeah, he's a smart dummy. Why? Because he's saying, okay, you guys can go down, but I'm not. I'm just gonna stand on my feet. All right, so in this case, that pair or that currency is the one you want to beat the ones going down. And this is where there is a extension. When they are going down, it's different, but when the dollar is going down, it's different from when the dollar is going up. So you have to understand the relationship. When the dollar is going down, everybody has to drop. The one everyone has to rally. The one that's dropped with the dollar is considered to be dummy, so we beat him up. Now when the dollar is going up and everyone has to go down, the one that stands is smart, right? It's a dummy smart, so he is going to beat everyone that is down, right? So from the first to the third, if you go on to all the pairs, you're going to see that New Zealand is beating everyone up. Let's go and check. Where is it? Give me a second. Okay, so let's start with Euro New Zealand from first to third. All right, let's change it to the hourly. So from first to third, that's your first to third. You see New Zealand is beating Euro up, so it's dropping. All right, then we go to Aussie New Zealand from first to third. That's first to third. It's beating the Aussie up. New Zealand yen from first to third. Where's first to third? Right. Yeah, from first to third. This one didn't beat yen. New Zealand couldn't beat yen that much. Obviously, when I go back there, you're gonna see that yen was not dropping as much as it's supposed to. Yeah, let's go and check, and then you see why it didn't beat him that much. Yep. Let's go right here. So where's our first? Right there. Okay, so here, that's our first to third. Right there. See the drop? It barely dropped. That's why it didn't beat yen that much. Yeah, it barely dropped. That's why I didn't beat yen that much. So that's why price didn't fall that much. But let's carry on. Pound, yen. First was here. To third was there. That also got beaten. New Zealand CAD. First to third. This also got beaten. Yeah, being bullish. Then New Zealand Swiss. I don't want to go into New Zealand Swiss, but you get the story. So whenever you're trading or any cross pair, you want to come on this thing and see which one is doing what, especially for long term. Okay, this is for long term. You can do it for short term by going on the 4 hour and do it on the 4 hour. But for long term, you want to be looking on the daily and seeing, okay, which pair is rallying, which pair is dropping, which pair has got something that is going to cause it to pause. Once you study the relationship between all of them, you will come up with a trade idea, and then all you have to do next is to be patient and let the trade give you indication of where they want to go. So for example, let me delete some of these drawings on here, got so many of them. Right, so for example in here, when when pound made a higher high, okay, we made a higher high. Oop. Oop. There. When this made a higher high, okay, if I put this side to side and bring another pair right in here, let's say the Aussie. Let's say the Aussie, right? Let's put the Aussie on the daily, and then look right here, and you can use this also to filter our trades. This high and that high both made what? A higher high. Okay, both made a higher high, but right now look what's happening. Look what's happening. Okay, this is respecting that, that has broken. So this is weak, this is strong. That will give you where is it? Pound Aussie. This will give you that. Okay, so when this was going sideways, guess what was happening? They were both rallying, or they were both strong. That's why this went sideways. Okay, and then pound dropped. When pound dropped, this was coming down into an area. So here you will take a loss. Why? Because it's coming down to an area. So because institutional order flow is bullish, we stick with institutional order flow. So we're gonna try and buy. Okay, but what has happened right now, like from yesterday, is indicating that going forward, every retracement on pound Aussie should cause pound Aussies to continue going down. Why? Because there's a like a shift. there's a shift in price in both of them. One is making highs, one is making lows. So this thing is not gonna continue going down. It is gonna cause a retracement. But when it does retrace, because of this relationship, okay, because of that relationship, you expect this to pull back and then continue going down until you see a shift between these two again. So let's say all of a sudden, right, let me zoom. Okay, so let's say all of a sudden price will do this. Price will come all the way back up and break above this, and this one will stay where it is. Okay, and then do this. Okay, as soon as you see that, this pair is gonna reverse again. Yeah, so with this coming back up a little bit, it's gonna cause this to push back up. But if it gets up here, your idea is we are bearish, so you're gonna try and sell short. That's where you're gonna take a loss, and this is where taking a loss is normal. Yeah, taking a loss here is normal. Okay, like here, If you take a loss here, it's normal. Yeah, it's not abnormal. It's not, you've not done anything bad. It's just normal stop loss. Okay, so when it pulls back up, you're gonna try and sell again because it's bearish. But if you are aware of this and this does that, and then it shifts and this doesn't go up and break above that high, this is your indication that this pair is shifting from being bearish to being bullish. And that's what I used down here. That's what I used down here to call this move. Why? Let's go back. I want you to steady here, right in there. Okay, look where I've got my wick. Okay, right in there. There. Okay, this managed to break above it. Okay, it closed above it, whilst this didn't. 18th of August, it didn't. Let's go back here. Let's go back and look at 18th of August. Where was it? Right there. Okay, the fact that this didn't break above, this broke above, that didn't break above, that is a trade on its own. Here, yes, it retraced. Yes, that one retraced. But if you look at the relationship deeply, okay, if you look at the relationship deeply, let me zoom in there. I'm just gonna use this. It applies to all of them. You can look at all of them same way. This went for a stop run and then came back down. This broke above it. Yeah, that is an indication that this pair is stronger than that pair. Therefore, if there's any trade idea on this, it should be on the long side. Yeah, it should be on the long side. I want you to go back and study how these pairs reverses, because you're gonna see a lot of what I'm showing you on here. Go and study what caused this thing to reverse. Okay, you're gonna find out that at some point, somewhere down here during that coronavirus business, let's go down. Okay, you're gonna find that at some point during the coronavirus business, there was a shift. Okay, one of them failed to break above something. I'm not gonna do it for you. You go and study it. One of them failed to do something, and that caused price to turn around. Okay, once you're able to understand the relationship between the futures, trading these pairs becomes the easiest. That's why you can be able to trade all these, because you understand what is going behind the scene. Okay, and then once you're able to incorporate the stuff that I use, like the last up candles, the last down candles, where price has traded to, the reason why it's rejecting, once you're able to combine all those stuff, okay, then you'll be able to then catch these kind of trades. Yeah, these kind of moves. Let's go back and put OZ, and then I'll do this, and then I'll call it a day. Let's, like I did mention, I use like 2 hours to teach this, and I'm just using about 20 minutes to explain so you can understand. Let's remove all this drawing, and most of it is coming from spending time on the chart. Okay, not everything was taught to me. Most of it is coming from spending time on the chart. I want you to look closely. Okay, look at this candle, Monday's candle. Not Monday, that's Tuesday. This is Monday, Tuesday, Wednesday, Thursday. Monday's candle. Look at Tuesday's candle. What is the difference between them? that this one went down. This one went down further. This one went down further than that one. Okay, so right in there, you can tell that there is a shift, that there is, this pair is stronger than that one. Okay, this pair is stronger than that one. It's as simple as that. Once this candle closed, like the daily closed, straight away you know that this pair is stronger than that one, because this sold off like crazily, that didn't. Therefore, if you are going to measure the relationship between Aussie and New Zealand, you want to be buying Aussie and be selling the New Zealand. So if we come back in here, okay, you want to be buying the Aussie and selling the New Zealand. That's why we are in a buy. Okay, that's why we are in a buy. So hopefully I've managed to convince you about these pairs, but I want you to study it. I don't want you to take my word for it. I want you to go in your chart and then put some time in and then study the relationship between when this drops, okay, when this drops, what they do, when this rally, what they do, and how to combine them, how to use them to be able to frame a trade for a cross pair. Okay, that is your assignment. Go and study that and then see what you come up with. You come up with a lot of understanding where you can be able to frame or be able to come up with a cross pair that is going to move whether up or down, and then you can take advantage of that. All right, so I am going to end here. I spent 30 minutes doing it. I think it's enough. If you combine the morning session and the afternoon session, I think I'll do a part 3 and teach you how to look at the highs and lows for divergence, so you can anticipate something coming. So the next one will be a part 3 where you'll be looking at, let me go back. We'll do a part 3 where you'll be looking at the highs and lows. Let me put the euro here. Okay, you'll be looking at the highs and lows. Yeah, you're comparing the highs and lows, and then you'll be looking for divergence. Divergence means, okay, this made a high, sweet, did that also make a high? If that didn't make a high, that means this one is stronger than that. So all you have to do is pair them, wait for this one to trade into an area of interest, and then you go for this pair. So let's say on this particular one in here, okay, right here, okay, this failed to close above it, and that one did. Yeah, that one has closed above this ages ago. It closed above it right here. So on the 27th, look at that high was broken here. So on the 27th, going forward, yeah, here on the 27th, going forward, CAD is stronger than euro automatically. Yeah, if I draw a line, you see it right there. Okay, so going forward, 27th, CAD is stronger than euro. So if you know that, and then you come on EuroCAD, and go on there, and then go on to 27th of August. 27th of August is right here until let's go back, 27th, 28th, 29th, 30th. Right, 27th to 30th, you should see this thing drop. 27th to 30th. It's 27th. Am I right? 27th. Yeah. CAD. Yeah. So 27th. Let's go on to the hourly. 27th of August is right here, in here, to 30th. That was a weekend. Right, that was a weekend. But you understand what I'm trying to communicate. Okay, find the relationship between them. Okay, and then use, for now, use what I've showed you. Go with the commander and the soldiers. Okay, and then later on I'm going to teach you how to use the highs to call the cross pairs. For now, the best one will be go with the commander. What is the commander doing, and which one is being the dummy? Okay, dollar going up or down, which one is being the dummy? Then you go and beat them up. Okay, that is the easiest one to trade. And then the more advanced one is the one I'm trying to show you here, by just comparing the highs and lows to determine, okay, yes, the commander is going down, but how do I know that this particular pair in this time frame is going to go up or going to go down? You compare the highs and lows. But I'm going to go through that, I think maybe Monday, or tomorrow. Yeah, we do have a session tomorrow, so I'll go through that tomorrow. All right, so I'm gonna end here. I've taken too much time. Hopefully you got something out of it, and if you did, just practice, and then you should see some difference in your cross pair trading. Cross pair means like using how to use the futures market to be able to trade these ones. Like for example, today could be a day that you could go long on euro CAD. Why? Because euro is bullish whilst CAD is not doing, even though it's acting like it's bullish, it's not, because it's being kept down here. So when euro be traced down, okay, that's your buy. All right, so there you go.